Hello there, I'm Ed Butler. Welcome to the download of a tax-centred business daily from the BBC. Coming up, Kofi Annan, the former UN Secretary-General, tells the programme how corporate tax dodging has become Africa's scourge.
You're talking double the amount flowing out of Africa than coming in. We would much rather trade ourselves and earn our way out rather than live on handouts.
But I wonder, can you really expect the corporate tax dodgers not just to be legal, but to be good as well?
Corporates need certainty, so they're not going to want something as ethereal as do the right thing. They were going to want to know, well, what exactly is this right thing you're asking me to do?
So, pitching the tax message in Business Daily from the BBC. Well, the dust may have settled on this week's G8 meeting of world leaders, but the argument over what actually it achieved drags on. Tackling corporate tax avoidance was one major target, and a communiqué did spell out initiatives such as the sharing of tax information and moves against tax havens. Some campaigners have railed against a lack of detail in the statement, though. One man, though, who is cautiously optimistic is the UN's former Secretary-General, now a leading development campaigner, Kofi Annan. He says that Africa is losing a staggering amount in tax revenue. Some estimates say it's as much as $60 billion a year, and he says that tackling this problem alone could help transform the fortunes of the world's poorest continent.
Natural resources offer great opportunity for Africa, and managed properly, we could earn enough and use the revenues to improve the lot of our people by investing in education, health, infrastructure, energy. But the way it is managed at the moment, Africa is not earning what it should.
What is the scale of the lost revenue we're talking about?
Oh, I think it's quite extraordinary, actually. Africa loses more money through mispricing than it gets in development and DAC assistance.
So more is coming out than going in, effectively, from
absolutely, more comes out than goes in. And in fact, if you add the mispricing to other illicit flows, you're talking double the amount flowing out of Africa than coming in. We would much rather trade ourselves and earn our way out rather than live on handouts.
Now, a joint declaration by the G8 countries at their summit in Northern Ireland agreed to share tax information and to change rules, allowing companies to shift profits across borders. Are you happy with that?
I think it's a step in the right direction, and I think Prime Minister Cameron and the UK G8 presidency is to be congratulated for making this effort and going as far as it has gone. And I was in London on Saturday, and we were all delighted when Canada decided to come on board. And I think if you have Canada, European Union, US, you have about 70% of the companies involved, and I would hope others will come on board.
And yet, the sharing of tax information is not going to be extended to poor countries. They're going to share tax information with each other, the G8 countries, I'm reading, and yet the proposal put forward to exchange this tax information with the poorer nations is not going out. It sounds like a bit of a snub to African nations.
I may get it wrong, but from what I understand, they will share the tax information with the poorer countries as well. Where we've had a bit of a problem is the company ownership, where there will be a register, but to be limited to officials and tax people. But on the question of tax information and exchange of information, the third world and the developing world, the African countries, should have access to that. Of course, I've also requested that they consider capacity building and training the African tax officials to be able to access and use this information effectively to protect themselves.
Isn't the problem that in Africa, much of the tax revenue in the past, the revenue that is indeed paid to governments, has very often gone straight into the pockets of officials?
There has been corruption, yes, but that is no reason for us not to want to improve things. And I think, in fact, the emphasis on corruption and accountability is one of the most effective ways of also curbing and trying to end the corruption.
Really? Because, I mean, it's an important question. This either greater tax revenue is going to help the poor people in Africa, or it's simply going to enhance the problem of corruption.
I don't think it necessarily enhances, because basically what you're asking companies to do is to publish how much they have paid up to the project level, anything above $100,000. They will have to indicate on this project or in this country I paid X amount. The governments with pressure from their own civil society and others, would also have to confirm that they have received this amount and indicate what they have done with it and how effectively they've used it to improve the conditions in their country. And so it's going to be much more difficult, as you say, to collect the money from the companies and put it in some private account.
Right, because that is, am I right in saying, what has been happening in the past? Effectively, instead of companies paying taxes, they've been offering bribes to government officials.
That has happened in the past, and that's one of the reasons why, for example, several African countries have today started putting each agreement they signed on the net for the population to know what is in these agreements and what to expect.
G8 countries make pledges like this, pledges of transparency. Fundamentally, what we need is, do we not, is that African countries are as transparent as that.
You need both sides. You need transparency all around, from the corporations, from the G8 countries, and above all, from the Africans. And in fact, African civil society is developing. We have robust civil society in many countries on the continent that is going to put the feet of governments to the fire.
Do you think that Western nations have been complicit in the past in turning a blind eye to the problem of tax evasion in Africa?
I will not say necessarily complicit, even though they've been beneficiaries, because the monies taken out of Africa often come to their jurisdiction. But I think today they are feeling the pain too, that tax evasion does have impact on their economies. It does provoke their society. It does provoke people who do not have jobs, whose services are being cut, to see that not everybody is paying their way. And so today we are making a common cause.
Former UN Secretary-General Kofi Annan. And do listen out for more of that fascinating interview on Business Daily next week, where Mr. Annan tells me about his aspiration to lift all the poorest Africans out of poverty. You're listening to Business Daily from the BBC with Ed Butler. Well, away from Africa, the detail of how to harmonise tax regimes and close loopholes remains a mountain for legislators to climb. After the G8, the G20 working group will meet next month to work on further initiatives, and the Organisation of Economic Cooperation and Development has been tasked with outlining some potential solutions. Its Secretary-General is Angel Gurria. He told Simon Jack about the possible thrust of these reforms.
What we were looking for originally was to avoid double taxation, but we never said that companies should not pay taxes at all. There's an ethical question and a financial question here. You know, companies have to pay their fair share. We don't want companies to be multi-taxed. But the idea was never that companies pay no taxes. They have to share with everybody and in a way which is appropriate. This is not happening now.
OK, even the companies themselves say they welcome a debate on how to fix this issue. They're saying that what they do is strictly by the letter of the law. Do you think that some governments are slightly hypocritical? I mean, Ireland, for example, can't afford to lose Apple as someone who has got a big presence in Ireland. Lots of governments try and attract business by offering tax breaks, low tax environment. So they're saying they want to get tough on tax, but at the same time, they're almost encouraging this activity by offering special deals, special breaks, special laws.
This is, if you will, an era which these companies have enjoyed, where we all conspired to make it happen like that. We created a set of rules where they not only could, but were expected to take advantage of all these facilities, and everybody turned the other way. Now, what is different today is we've had 5 years of a crisis. Countries now, and finance ministers in particular, have the choice of increasing taxes to those that are left that can be taxed, or cutting expenses in order to make ends meet, reduce the deficits, and reduce the accumulated weight of the debt, which has increased to almost 100% on average in the OECD countries.
That's a separate issue, though, isn't it? Because you can't say, now that we actually need the money, we're going to change the law. It's got to be a law which has got a sound principle, not just because, blimey, we're a bit short of cash. Let's change the law.
What has happened is that the regime we have created has now been seen very clearly for what it is, and that is one in which the principle of universal application of taxes is not being applied to the most powerful companies in the world.
Angel Gurria of the OECD. So how to apply that universal principle? Well, much of the argument has boiled down to the claim that while major corporations like Apple and Google obeyed the letter of the law on taxation, they clearly neglected its spirit. In other words, they've been legal but not ethical. So, could improved corporate ethics be part of the solution? Is it realistic to expect market-driven companies not just to follow the rules, but to be good as well? I asked Richard Murphy, an anti-poverty campaigner and tax expert, and Francesca Lagerberg, the global head of tax for the leading accountancy firm Grant Thornton International.
This is such a complex area that there's actually no easy solutions, because how do you determine what's right, what's the fair thing to do? And I think politicians are hoping that corporates will ride to the rescue and solve this tricky problem for them. But a wave of pixie dust and wishful thinking isn't going to solve this issue. This needs international legal changes, because corporates need certainty. So they're not going to want something as ethereal as do the right thing. They were going to want to know, well, what exactly is this right thing you're asking me to do?
Richard, what do you think?
Well, I'm afraid I disagree with Francesca on this, because actually there is a legal obligation in UK law and in the law of many countries that already exists for companies to do the right thing. In the UK, it is called Section 172 of our Companies Act, and it quite clearly says that companies are not run in the sole interest of shareholders. They're also run in the interests of employees. There has to be a consideration of the long-term reputation of the company, the customers, and relationships with regulatory authorities. In other words, the directors must use their judgment to balance the objectives that they have. Now, they will use their judgment to decide how to treat their employees. Good companies do not abuse the environment. We've established that. So why is it that apparently we need legal guidance for a company to decide whether or not it should pay tax?
Well, it's not about abuse that we're really talking about here in its simplest form. It's about something that's a bit more grey than that. It's about where do you draw the line between what's acceptable and what's not acceptable. And there's been quite a few instances, particularly in the UK, where companies have done certain things in the past that they thought were acceptable then, but have ceased to be acceptable. The goalposts have moved.
Such as?
The classic example would be some of the structuring that many corporates would have done several years ago, which these days they wouldn't do because the general mood has moved on.
Richard, can't we all agree here that obviously having rules is preferable to having something vague like being good? It would be better if everybody had a strict rule book that they could follow. Just like, a football match is run by rules, we should have the same for tax.
The fact is that there is no rule book that has ever been written which is not subject to the exercise of judgment when it comes to relating the rules to the real situation that somebody faces at a point of time. So the suggestion that we can get over this problem with rules is just wrong. It is not possible. And there is actually now a very clear standard that has emerged which provides all large corporations with the certainty they desire. It's very simple, it's very straightforward, and it is do not tax avoid.
But you are allowed to tax mitigate, which is what everybody does. Indeed, private taxpayers, private people who declare their own taxes do that, don't they? They do things because they're offsetting against charitable causes or whatever. These are all legitimate and indeed desirable things that companies should do.
But let's be clear about it. There's a substantial difference between tax avoidance and tax mitigation. And it is obvious to anyone who knows tax law which side of that fence they are.
Francesca, is it obvious?
In some cases it can be, but in many cases it isn't. Take a classic example where you may have an organisation that's operating over many jurisdictions, and it might put in place a particular type of structure to help reduce the tax or the effects of tax in one particular jurisdiction that otherwise would be actually quite catastrophic to a transaction. And they're driven by the fact we don't have a single tax system across the globe. Is that something that's mitigation or is it something that's avoidance? That often depends on the person looking at it. I think the reality is we have to get behind getting change for a modern economy, a digital economy.
I agree, Francesca, that is where the debate should be heading, but let's not rule out of this the fact that there are lawyers, accountants and bankers who have made it their business model to undermine the existing rules. One of the fundamental changes we now need is a change of approach from business and from its advisors on this issue, so that it is not seen to be necessary to avoid, to apparently apparently fulfil a company's obligation which does not exist in law. And we have a further change we need, which again the tax profession stands in the way of, which is we must actually tax the reality of the modern corporation and not a work of fiction. And the reality is that there is one entity which may have thousands of subsidiaries. We have to tax them as a whole, and if we did that, a great deal of the abuse that goes on would disappear.
Francesca, you are the tax profession. Respond.
I think the reality here is actually the tax profession helping to improve the tax system, because they're the people who know how it works. And the OECD changes will rely very heavily on the tax profession to help there. I would, though, agree with the fact that transparency is a massive part of this whole debate. It's really important that people can see what corporates are doing and don't feel things are being hidden behind closed doors.
Presumably, Francesca, I mean, you are seeing a shift in the motivation on the part of large corporations, the ones your clients, the one people you represent. They do want to be seen to be doing the right thing.
Well, they do, and it's not just being seen to be doing it. They genuinely do want to do it. I mean, there's a whole piece here around obviously ensuring they keep their brand and their reputation up, because they don't want to be perceived as being the organisation that's doing something that's wrong. But actually, much more common is the fact they just want to be sure they're paying the right amount of tax in the jurisdictions they operate in.
Richard, whatever the reality here, I mean, presumably public pressure is going to be the best watchdog. If this idea of principled corporate behaviour is to be upheld.
Let's be clear about it. The G8 summit and its focus on tax and transparency would simply not have happened without the NGO community having put this right at the centre of the international debate. And that is telling in itself. And the solutions that are being provided, country-by-country reporting, automatic information exchange, tackling tax havens, are all issues that have come from outside the tax profession and are now being imposed upon it. The G8 was important because it will never be possible to say again that tax avoidance is a neutral activity by major multinational corporations. It's now recognised that this is a practice that has to be tackled.
Richard Murphy, tax justice campaigner, and also Francesca Lagerberg of Grant Thornton International. Well, tell us what you think. One of our Facebook friends, Maureen, did just that, referring to the G8 meeting. She called it simply rich people having rich food in a very nice place while talking about poor people. I think we know where she stands. Keep the thoughts coming.